In the dim glow of trading screens across Wall Street and the City of London, a silent fracture is spreading through the heart of the global economy, one that no amount of digital manipulation can mend. Imagine this. In the bustling halls of the Shanghai Gold Exchange, silver bars are commanding a staggering premium, while just across the Pacific, in the vaults of New York's COMEX, the same metal trades at a lower spot price, a yawning gap that defies every rule of modern finance. This isn't a glitch or a fleeting anomaly. It's the shattering of arbitrage, the invisible force that once bound East and West in a delicate balance of profit and supply. As we stand on the precipice of 2026, with China's ironclad export restrictions set to slam shut on January 1st, this broken bridge signals something far more profound, a geopolitical power shift, where the East hoards the lifeblood of technology and warfare, leaving the West scrambling in the dust of empty promises and inflated paper claims. What you're about to uncover is not just a market malfunction, but the exposed underbelly of a system on the brink, where the true price of silver is no longer dictated by algorithms in Manhattan, but by the strategic calculations of Beijing. And the consequences could reshape industries, ignite shortages, and trigger economic tremors felt from Silicon Valley to the factory floors of Europe. To grasp the magnitude of the Shanghai silver shock, we must first journey back to the foundations of the precious metals world, where silver has long been the unsung hero of human progress, far beyond its gleam in jewelry or coins. This humble metal, with its unparalleled conductivity, pulses through the veins of our modern existence, powering the solar panels that harvest the sun's energy, enabling the intricate circuits in electric vehicles that promise a greener tomorrow, and even forming the critical components in hypersonic missiles that define the cutting edge of military might. For decades, the global silver market operated like a well-oiled machine, with arbitrage acting as the lubricant that kept prices aligned across continents. Arbitrage, in its essence, is the trader's holy grail, the risk-free exploitation of price differences between markets. If silver traded cheaper in London than in Shanghai, savvy operators would buy low in the West, ship it east, and pocket the premium, equalizing the scales in the process. This dance ensured liquidity, stability, and a sense of fairness, in a world where fortunes are made and lost in milliseconds. But in 2025, as silver's demand exploded amid a perfect storm of industrial hunger and investor frenzy, cracks began to appear. Prices surged dramatically year to date, shattering records and drawing in hordes of speculators. Yet the physical metal, the tangible bars and ingots, started vanishing from Western vaults at an alarming rate. Reports from insiders at the London Bullion Market Association whispered of depleted inventories, with eligible silver dipping to precarious lows, while COMEX deliveries hit all-time highs, claiming a massive portion of registered stocks in recent months. Meanwhile, in China, the world's largest consumer of industrial silver, absorbing more than half of global demand, the Shanghai Gold Exchange became a black hole pulling in metal with insatiable force. The premium there, once modest, ballooned significantly, a chasm that arbitrage should have bridged but didn't. Building on this tension, let's trace the timeline of how we arrived at this pivotal moment. A narrative of hubris, innovation, an inevitable reckoning that unfolds like a thriller set against global finance. It began in the post-pandemic recovery when silver's industrial demand rebounded strongly, fueled by the green energy boom and digital revolution. The deficit was glaring, but Western markets masked it with financial instruments, leasing the same bars multiple times through unallocated accounts, a house of cards perfected over decades. In 2025, as economic factors shifted, investors flocked to silver, pushing prices to historic levels. But the real accelerant was China's strategic moves. Facing supply crunches, Beijing accelerated imports from Western vaults. Arbitrage started faltering when delays and premiums made trades unprofitable. With the export restrictions announced, the gap widened, because Chinese buyers were willing to pay whatever it took to secure stocks. Reports paint frantic bidding in Shanghai, contrasting with strains on COMEX. This breakdown exposes the core issues in Western systems, where paper claims far outnumber actual ounces. The emotional crescendo builds as we realize this shift is profound. It's the dawn of price discovery moving eastward, where real demand dictates value, as suspense mounts toward the climax. Envision the chaos as restrictions fully bite, unleashing shortages that could rival past crises. Global supply chains will fracture, forcing manufacturers to scramble in a limited market. Mining production can't ramp up quickly. Major producers are at capacity, new projects take years. The result, premiums exploding. Retail buyers facing high markups, dealers reporting back orders, industrial users initiating stockpiling, bidding prices higher. Forecasts suggest significant rises, a tsunami impacting consumers. Geopolitically, this strengthens China's position. By controlling silver, choking Western innovation while bolstering its own projects. Faces a stark choice amid trade tensions, emotional highs in stories of resilience, those holding physical silver as a shield, versus regret of paper holders as bifurcation solidifies. This climax is the logical endpoint of a system that prioritized short-term gains, only to see reserves flow east, leaving empty vaults and rising prices. Yet, as the dust settles in this narrative of exposure and transformation, we find a glimmer of hope amid the warnings, a call to awaken before the full impacts engulf us. The Shanghai silver shock serves as a stark reminder that true wealth lies in tangible assets that endure geopolitical tempests. For viewers in the US and UK, this is an opportunity to reassess, to diversify holdings, support domestic development, and advocate for supply chain sovereignty. As the new year unfolds, with prices in a bifurcated world, those who act now, securing physical silver or resilient investments, will emerge as victors in this new era. China has exposed the broken arbitrage and rewritten the rules, positioning as architects of the future economy. But knowledge is power. By understanding this shock, we can navigate ahead, turning crisis into catalyst for a balanced, self-reliant future. The vaults may be draining, the premiums soaring, but in the end, it's the informed who will hold the real treasure, shining brightly against the gathering shadows. Why? Because the ships aren't sailing as freely, the deals aren't closing as easily, and the metal that once flowed freely is now locked behind emerging barriers, foreshadowing a bifurcation where the East sets the real price, and the West is left with illusions. As we delve deeper into this unfolding drama, picture the bustling ports of Shanghai and Hong Kong, where container ships laden with silver from around the world dock under the watchful eyes of state officials. Their cargoes destined not for export, but for the ravenous maw of China's industrial machine. The roots of this shock trace back to Beijing's calculated pivot, a strategy honed over years of observing Western financial dominance and quietly building an alternative. In late 2025, China's Ministry of Commerce announced significant changes. Starting January 1st, 2026, silver exports would fall under state trading management, requiring stringent licenses that only the largest producers could hope to obtain. This isn't mere bureaucracy, it's a deliberate chokehold on global supply. China, a major silver producer on the planet, has historically supplied much to international markets. But with domestic demand skyrocketing from solar installations, electric vehicle batteries, and infrastructure, the government is prioritizing self-sufficiency. Analysts project a global deficit of hundreds of millions of ounces in 2025, a shortfall exacerbated by years of underinvestment in mining and refining. Now, with these restrictions in place, experts warn the gap could widen substantially. As China's refined silver dries up for export, the arbitrage breakdown isn't accidental. It's the first symptom of this policy in action. Traders in Shanghai are paying premiums because they know supply will tighten further, creating a price that reflects true scarcity rather than manipulated futures. In contrast, Western prices cling to paper trading, where banks and hedge funds juggle contracts backed by ever-dwindling physical stocks. Whispers from market veterans speak of spiking lease rates, overwhelmed refineries, and dealers sold out, signaling a market not just strained, but fundamentally fractured. This isn't just about dollars and ounces, it's economic warfare, where China wields silver as a weapon, securing its technological ascendancy, while exposing the vulnerabilities of a West overly reliant on imported critical minerals. The emotional weight of this revelation hits hardest when we consider the human stories woven into the fabric of this crisis, the everyday innovators and workers whose dreams are now teetering on the edge of this silver abyss. Think of the engineers in California's solar valleys, racing to meet ambitious net zero targets, only to face skyrocketing costs as silver becomes a luxury item. In 2025, global solar demand alone consumed massive amounts of silver, a figure set to climb as nations pour billions into green transitions. Yet, with China's export curbs in effect, factories are reporting delays, their supply chains buckling under added premiums. Executives confide that without diversified sourcing, assembly lines could halt, jeopardizing jobs and stalling the fight against climate change. Then there's the tech giants, Apple, Samsung, Tesla, whose data centers and AI empires rely on silver's superior conductivity. As AI demand explodes, consuming vast quantities for servers and semiconductors, these companies are stockpiling, bidding up prices in a panic. But the stakes rise even higher in national security, where silver's role in military applications makes this bifurcation a matter of geopolitical survival. Dependence on Chinese supply leaves vulnerabilities, especially amid escalating tensions. Imagine the frustration of defense contractors, their programs crippled by shortages. While China's arsenal grows fortified by the metal it's hoarding. This isn't abstract economics. It's the quiet desperation of families in manufacturing towns, the anxiety of investors, and the collective unease of a world realizing that the foundations of progress are slipping away to the east. Thank you for staying with me till the end. Here on The Scope, we dig past the headlines and uncover the hidden layers history tried to bury. If this documentary made you think differently, hit subscribe. Your support tells me to keep creating deeper investigations. Share this video with someone who loves powerful, untold stories, and leave your thoughts in the comments. I read everyone. A new, even stronger documentary is already on the way. So stay curious, and I'll see you again soon, right here on The Scope.